What's going on, everybody? In today's video, I'll be going in depth over how I use the Fibonacci specifically on US30, NAS100, SPX, and gold. I also break down how fundamentals apply to whatever you're trading, whether it be stocks, Forex, or HFX. So with that being said, I hope you guys learned something from the video. Leave comments below. Let me know what you'd like to see. Let's go ahead and get into it. So let's start with US30. I'll break down the concepts here, and then you'll see how it applies to everything else that I have marked up. So looking at US30, I always advise to start with higher time frames, at least to 4 hours, so you can get a better idea of what the market is doing. Watch this. Here's a recent, like the highest high we've had in a while. We came down, we made a low, then we made a lower high. Came down, made a lower low, lower high. Came all the way down. You could say this was a lower low and then a lower high, but here's the swing low. The reason I call this a swing low, because it is the first area that's lower than these two lows. Does that make sense? Yes. Perfect. Now watch this. This is how I use fibs. And y'all gonna be like, wow, it makes so much sense. All right. So if I start at this point right here, I use wick to wick. It does not matter if you use wick or body. Just be consistent. If you start with wicks here, take it to wicks here. Make sense? Taking my fib, going wick to wick. So I came to this wick right here. Making sense so far? Cool. All right. From this high to this low, watch how high the market swings. It swung to just before 75%. If you've been on any of my sessions, I always say, look for pullbacks from 0.5 to 0.75 based on the fibs. Now, watch this. Do I want to do it here on the daily? No, we good. Let's stay on the 4 hour. All right. So, there's my new swing. We went from this point, so we had a lower high, we made a low. Here's the next high, here's the next low. Again, swings. This low is lower than this low. So I'll remove that, I'll do it again. Let's go from here to here. What areas did I say to look for swings, pullbacks to?
0.5 to 0.75.
0.5 to 0.75. Look at this around 0.5. Everybody see that? So this one swung to just before 0.75. This moves retraced to 0.5. Now it's going back down. Now watch this. Let's take that initial swing that we had. It's about here. It doesn't have to be exact. It made the move from 1 to 0 or 0 to 1, doesn't matter, it's the same move. After it retraced, I would say this is around 70%. It swung down another 23, 24%. See this right here? It pulled back to around 70%, 65, 70%. Then swung down beyond the 1 to the 23.6. Watch this. Let's take this new move. About here to about here was the swing. Guess what my potential target is going to be? There's a potential target. I want it to come back to 0. Here's my entry. Target is back to where it was. And then based on what it has done, I don't need this. I already did it. My move on my target is 23%. Does that make sense? We clean it up. There's my targets. Now, how do I know? Well, you don't really know, but you have to base your decisions on what the market does repeatedly. The market repeatedly makes these same moves. So I trade accordingly. So I went swing to swing. When it retraced here, when it retraced to this area, it made its move again and it retraced again. So now my anticipated entry is for it to break this zone. If it breaks that zone, I'm going to take it to where it was and then 20 to 25% beyond. So my second move was from this point to this point. Here was my retracement. Right in this area. This was around 50%. This was around 70%. So I always tell you guys, if you're looking for pullbacks, you go between 50 to 70%. That's US30. Watch this. I already marked it on NAS, but I'll do it again. Take the fibs from this point to this point. Remember I said the pullback is between 50 and 75% where you want to look to re-enter. Look at this. I'll remove these fibs. Pullback was around 50%. I'll answer that, James, in a minute. Pullback was at 50%. So then I measured again from this area to this area. Look at that. Just beyond 50%. Let me get rid of this fib too. Clean this up. Oh, I didn't mark it yet. My bad. Just beyond 50%. Right here. Now I'll get rid of that fib. There's my pullback. So now my entry will be, actually my entry is up here, but safe entry is right here. I'm taking targets back to where it was and then 23 to 25% beyond where it was, just like the market always does. Make sense so far? All right, now watch this. People always ask, how do I know where to enter? Let me clean this up. And I'll remark this before I drop it. All right, get rid of all of this. So our movement started up here. Market came down. It made a double and reversed. Came down. Made a double and kept dropping. See, it made a double here and reversed. Came down. When it pulled back, it made a double. So because it's a downtrend, as it make doubles at the top, watch this. Where's my ray? I will mark this first double. Market comes down. Here's a double here. I'll mark that one as well. Now, if you've been on any of my sessions, I tell you to look for evening stars and morning stars. Morning stars is when you see patterns that look like this. Let me make this bigger so you can see it. You'll have a bearish candle pushing down. You'll have a spinning top type candle, doji candle. Then you'll have bullish momentum. You also had a big morning star here. So that represents supply because the market did not want to push below those areas. Watch this. On this big one, I'll box that up and I'll bring it across. No, I want to show you something. Let's take it right here. Notice where I mark these doubles. I need to come up with a name for those. These double pairs. Notice where I mark these double pairs. Notice where I mark this area of demand. When I do this, this means that I need to wait for the market to come back and retest this area. If you notice where I mark these, this is also an area where I need the market to come back and retest. The reason I need for it to come back and retest this is so I can enter a new sell. The reason I need for it to come back and retest this is so I can enter a buy, because I know the market has to retrace around areas of supply and demand. Why? Because the big guys, that's where they get the money to fulfill the orders of other traders. Does that make sense? We actually fund trading for the big guys because they know most of us don't understand how to trade. So they know that they can go pick up the money from us to fund their investments. Make sense? All right. Are the double pairs same as bankers' candles? Yes and no. I'll explain that too. Good question. Now watch this. When the market comes back into this area, I will confidently enter a buy. My stop loss, people always ask, where do I put stop losses? My stop loss is underneath that zone. You determine how far underneath. I don't know your trading balance. I don't know your comfortability. So there is no exact amount. Just place it somewhere beneath that zone. Watch this. Uh-oh. Now, for some of you, you may enter then. How do I enter? I need a candle to go in the opposite direction. This is my alert. This triggers my alert. Now I need to see bullish activity away from this zone. There we go. Safely, you can enter the next bullish candle. Notice I said next bullish candle. Is this a bullish candle? No, that's a bearish candle. So still patient. There's your bullish candle. Watch. Oh, by the way, this first line is my first take profit on the buy. Why? Because those were my pairs. Remember, I tell you, always target pairs. Please mute your lines. Mute. There you go. I always target these pairs. So we're still going. A lot of you would be exiting the trade now because it came back to your entry. For more experienced traders, you just enter another position because it hasn't hit stop loss. Now, first target hit, second target almost hit. But this is what I didn't tell you all. I box up those pairs. Why? Not only is that my second take profit, that's also my first entry for the sell. Does that make sense? Let me know in the chat if that makes sense. Now, watch this. We're out of the buy. In fact, as soon as this hit the first target, most of you should have been done. If not, at least your stop loss should have been up here. When it's in blue, it's on you. It doesn't have to hit your target. If it's close to your percentage, get out. Preserve your capital. Now watch. Who asked that question? I believe James asked, and Alfred. Alfred, here you go. Here's the banker's candle right here. The banker's candle is the last move before a push in the opposite direction. So you target the banker's candle as an entry. We cashed in on this buy because it hit this demand zone. Now we're looking for a sell. It came back up into the banker's candle area. Now we're pushing down. Guess what my first take profit is? Going down. Watch this. My first take profit, the pairs. I'm consistent with how I target. I'm always looking for pairs. My second take profit, you can do these, but right here. Let's move this up and you recycle. First target hit. At this point, I'm in a risk-free trade. I've already secured. Let's say you took it from this candle. 455 pips. Let's speed this thing up. Hit the same target again. Let's go ahead and go to the end. Look at that. Both targets hit. We're not even talking about all of this. We're out of this trade up here. I don't know how I drew that, but anyway. But does that make sense? Let me know in the chat if that makes sense. Cool. Now, watch this. Let's clean this up. Let me stop this share. There we go. Let me go back to my share. I think that was me writing. Okay, can you all see my trading view?
Yes.
Cool. All right, let's go to SPX. Show y'all this is not a fluke. Marked it up. Same concept. I go from swing high to swing low. My swings have to be above previous and below previous. That's the only way it's a swing for me. I take the fibs from here to here. This retraced to the T, 61.8%. Cool. So it's marked up. That is also a banker's candle. So I'll box from this wick to this candle. Come on, come on. Look at that. Now, not only is that my retracement, that's my entry. Because price came up to a banker's candle. But watch this. Let's rewind. Let me show you why this makes sense. Let's take it here. Just like before, you can box up this area right in here. When you see 3 consecutive long wicks like that, box that up. I am waiting now for price to come back into this area. My take profits will be these previous twins. That one, I'll remove that because we have the line there. Everybody see this one? Those are my targets. I'll come back to this. So let's see what happens. I know a lot of y'all panic when price comes back down here, but if you're not over leveraging, if it has not hit your stop loss, leave the trade alone. Speed this. Target hit. Second target hit. First sale activated. Y'all follow me? Let me know if this is making sense. Now, what am I targeting now for sale targets? Okay, we can move this. Let's take this down to this pair. Remember, all I target is pairs right here. My second target will be where price has already been, right here. Now I can delete that box because that buy is gone. We already made money on that buy. Now let's see what we could do on the sell. Now, I know some of y'all panicking because it returned to your entry. It doesn't matter. Your take profit is above these. Let's keep going. Uh-oh. Money. First target hit. Let's keep the party going. Y'all cannot make this stuff up. I cannot make this stuff up. The problem is you all and me, all of us, we have to be more patient. Let the market do what it's going to do. Let it do what it's going to do. Your entry was here. This is not panic. This is second entry. The question was asked, where do you put your stop loss? Great question. If this is your entry, your stop loss is at least above the highest wick. I'll put mine above these pairs because that is a double. Remember the pairs I always talk about. So there's potential that price could come get that money. But we in there. If you trade bankers candles, tight stop losses. Tight. Now watch this. Let's clean this up. We're going to clean all of this up. Let's take this off. Yeah, we're done with you. Watch this. Remember I do fibs from the swing to the swing. Almost to the T. 61.8 retracement. So I can take that off. Watch this. Oh, let me show you where I'm starting from. Start from that down to the wick on this swing. There's a 61.8 retracement. I'll get to that, Mo, after I do this. Now, from the retracement, let me do the fib again. I want you to see how far the market went after it retraced. Retraced from here to here, retraced 61.8, almost again 23.6 beyond. Watch this. Now let's take it from the retracement down to the next swing. So I start at the retracement level down to the next swing. Let's see how far this retraced. Oh my goodness, look at that. Look at this. Another 61.8. So my targets now for the potential sell, because I believe the market is still pushing down. Why? Because it hasn't broken above these previous highs. So my entry will be here. My targets will be the fib levels. There's a target. I will split that one. I will take that one. And here's a longer term target. Now, watch this. I'm just curious as to where this line will touch in previous. So I'll go to the daily. Look at that. Right near the next double. And this one is right by a set of doubles. So guys, this stuff is not coincidence. It's not coincidence. The market moves based on traders, and skilled traders all trade similar zones. That's why you can target these areas, because the market has been there before. So traders will continue to target previous market touches. Does that make sense? Now, you said set stop loss at the most recent pair of highs to the left of. Yeah, just above. So for instance, on this banker's candle here, right in here, set your stop loss. Because I'm near a pair of candles here, I'll put it just above those. So this will be my stop loss on the sell. All right, Mo, we're moving the stop loss into entry once profits are seen. Move it at your daily percentage, right? If possible, absolutely. Secure your daily percentage. The rest is house money that you're playing with. Could you show an example applying this to trading HFX? All right. Let me go to a non-index to show this on HFX. What pair do you trade, Ken? Euro USD. I like Owanda's numbers. All right. Let's go down to the 15. For me, HFX longer time frames are 15 minutes because I trade 2 to 3 minutes. So my longer time frame will be 15 minutes. Here we go. Downtrend. So what should you be looking for if you're in a downtrend? What type of orders? Puts, sales, exactly. So in this case, support and resistance. You're not looking for supply and demand in HFX because you don't have that much time. You're looking for support and resistance. So I will mark up levels of support and resistance. Here is level of support. Here is a level of resistance. If you notice, price broke out of this level and it came back. We'll do a fib. It's not scripted. I don't even trade Euro USD, but I'm gonna do a fib from this top to this bottom. Let's just see. Wow, look at that. 618. Go figure. Now, you mark that up as an HFX trader. You mark that up. This is the challenge that HFX traders have. They don't trade off expectation, which you should. What do I mean by that? Well, as an HFX trader, because the market respects certain behavior, when it comes to these levels, I expect the market to react. So I mark up this level. This is on the 5-minute. As soon as price comes up into this area, let's drop to 3. Come back over. As soon as the market comes back to this area and makes a move down, I'm in there. Right here. Not this candle, this candle. Make sense? Now, if I'm trading 3 minutes, some people teach 3 minutes, some people teach 3 candles. Watch this. Let's say you do 3 candles. You get in as soon as this starts. 1, 2, 3. Did you clear that trade?
Yes.
Absolutely.
Absolutely.
Let's say you trade 3 minutes. You get in as soon as price hits here. Now let's move that box. Did you clear that trade if price closed here?
Absolutely.
Absolutely.
Yes.
Watch this. We cleared that trade. So you're looking, when you're trading HFX, you're looking for pullbacks to get in. All right. Price comes down. It breaks below these 2 pairs. So you look for the pullback. It pulled back right here. If you trade that for 3 candles, did you clear that trade?
It's amazing. Yes.
If you trade that for 3 minutes, did you clear that trade?
Absolutely.
Fundamentals apply regardless of the time frame. Watch this. Price came down. You say, you know what? This is a strong level of support and resistance. When price comes back to that area, I'm trading it again. Okay, cool. It came back. You trade 3 candles. Did you clear that trade?
Yes.
If you trade 3 minutes, did you clear that trade?
Absolutely.
This stuff works. It works. Watch this. Let's clear it. let's say you decide to trade later. So you come down here, you identify support. You say, when price comes back to this area, I'm trading it. Okay, cool. Did you clear that trade?
This is crazy, man.
Say, you know what? If price comes back to that area, I'm trading it again. Cool. Did you clear that trade?
Yes.
Some of you may be newer. We used to trade HFX live. We would do 7 out of 7, 7 out of 10, 5 out of 6 every day. Because it's fundamentals. You just apply the fundamentals and you be patient. Watch this. Let me see if I can find it. Oh man. Look at this. Again, I don't trade Euro USD, so let's drop a fib. Let's see what the pullback was. Wow, look at that. Remember I told you between 0.5, 0.75. Look at this pullback area. As soon as it hits. Now, in this one, you may have had to take a rollover because you see how price pushed up, but it pushed way down. If we were trading HFX, that thing would have been down here somewhere because you're making money on pip bets, not pips. So it applies to everything. It applies to everything. So let's go back. Let's get these markups so y'all can be up out of here. All right. We already marked it up. So on US30, if the market does what I think it does in terms of continuing this trend, I would expect price to come down in these areas. Same on NAS. Let's go back to the 4, mark it up again. We went. We can take it from here to here. Here is our banker's candle. Came back just below it and dropped. So we take it from here to here. Almost identical movement right in here. So my entry, if you want a safe entry, I believe it'll be down here. It'll either be up here or down here. So for a safe entry, target back to where it was and 23% beyond. Now, you don't have to wait. This is an index, so you don't have to wait for all of this. If you want to, you can break it up into halves. The way I know what halves are, I take my ruler, I go from entry to target, it marks half for you. Find the half line, drop a line. So there are your 2 targets. Sell target. Sell target. You can do the same here to find half. Drop a line. Target 3 if you want to hold it to 4, which I believe it will do. There you go. Now, when would I buy? On a downtrend, I will buy a certain percentage when I see this behavior, this morning star. If I see that morning star, I'll trade it back 25%. That's all I need. 25% would be, let's take it from here. Well, if you want to take the full 25%. Right here. It would have been from, if you got in safely, this move to this move, which would have been 217 pips. Can you go over for me why you would use the fib from the high to the first low and not the lower low? My fibs are based on previous lows. So let's say I am looking from here to here. You could have done the fib here. Watch this. Just so you know, this is not a fluke. Let's say we took the fib from this swing to this swing. Look at that. What did it pull back to? Your levels are your levels, are your levels are your levels. But the reason I took the bigger swing is because I wanted to get the full move where the market came back. But as you see, it made the same percentage move. That's the good thing about mathematics. It's not a respecter of persons. Look at that. Is it exact? Of course not. But I tell you, 50 to 75. It went beyond 50. It's closer to 60%. That's all you need. You trade, you look for the pullback of 50 to 75. If it does not break, sell it down. Make sense? So here we are. This potential sale on NAS. I already have SPX marked up. Gold. Watch this. See all of these wicks in activity? Demand. Supply, demand. It doesn't matter what you call it. Watch. Let's pull this back. Here. You say, you know what? This is an area of supply and demand. Supply and or demand. So let the market do what it's going to do. Not in there yet. Has to make a high and come back. Once it makes that high, now I'm looking for the re-entry. Here's my target. That's what you need to understand. When it leaves, you need it to make a high or low and then come back. Cool. So my entry will be in this area. My target will be where the market has been. Watch. There it is. There it is. There it is. Bam. Now on gold, you have to give gold room to breathe. Your stop losses cannot be as tight. So because I know how gold operates, I will look for this previous double. You see it broke that double and came back. See? So my stop loss is below that one. Got to give gold room to breathe. So if you're new to gold, you will have anxiety when you see price playing around these areas. If you're not used to it, I'm used to it. So I know gold is going to give me 400 pips and then come back. And if you're patient, not only will you get those 400 back, you'll get another 600. That's just the way gold plays. So it's not for the faint at heart. But I hope y'all learned something today. I will drop this recording and I'll drop the setups in the chat. If you were on the last one, when I told you I expected oil to go up to 100. Appreciate y'all. Be patient, be disciplined. I believe this week is going to be a great week, unfortunately, because of what's going on in the world. So I'll see y'all soon.